Hi, this is the Philosophical Angle, and I'm your host, Chris Angle. I'm the author of 4 books on philosophy, one of which is The Philosophical Equations of Economics. These books are available free for viewing online at www.philosophypublishing.com. The purpose of the Philosophical Angle is to examine and explicate the nature of the concepts and topics being used in current media and compare its essence with the usage in how they are being used. With me are 2 panelists. Mark Brennan. He's a professor at the Stern School of Business at New York University. He's also the editor of the London Quarterly Review, established 1807. Also with me is Rick Samuelson. Rick graduated from Yale, has an MBA from Wharton, an MA from Tufts, and is retired from the investment banking industry. He's currently a venture capitalist. Welcome, guys.
Thank you.
The purpose or the topic this week is, now that the fiscal cliff, at least the tax side, has somewhat been avoided, now what? So let's start. As we all know, Congress just on the midnight in December 31st, close to it, passed legislation, and the President is currently signing that in the new year, and so it'll become law, and it avoids what has become to be known as the fiscal cliff, in that many of the taxes that were created in the Bush administration will be extended into 2013 and beyond, bringing some certainty of the tax picture to the business world, which should help the markets. And of course, they did react jubilantly, exploding in 2 days of January 2nd and 3rd. However, it doesn't extend all of the Bush tax cuts. It does raise some taxes on the well-to-do, and in fact, raises taxes on everybody to some extent due to the payroll tax increase that will hit everybody's paycheck. So the politicians were not completely forthcoming. It is not just a tax on the well-to-do. But the economy is not in bad shape. And with the extension of these tax cuts, things should remain so. The legislative body, the House, was of course very resistant to raising taxes on anybody, being controlled by the GOP. But I think a feeling of pragmatism got a hold of everybody, and so that everybody kind of thought that this is the best it can be, and be the most or the least damaging to the economy. So it was passed. And so the economy is not bad off. Inflation is not too bad. Since September of 2011, the economy has created 2.1 million jobs, according to the Bureau of Labor Statistics. Just in the last 3 or 4 months, it's averaged about 140,000 jobs. GOP is now up to 3.1%. In 2012, the S&P 500 rose 13%, and 4% in the last quarter alone. Mergers and acquisitions is booming. And the investment banking income, as a result of that, that's up also. So overall, not bad. But now what? Well, there's a coming budget deficit struggle. As everybody knows, the other half of the fiscal cliff was not only raising taxes, but the huge expenditure problem facing the United States. And it's kind of like a household income of having $24,000 per year, but spending $36,000. Soon, that household would be heading for bankruptcy. The total spending that's already occurred by this household is about 3 times its income. Thus, the coming debt ceiling struggle in Congress is going to be quite something, because some politicians recognize that this house of cards cannot last long. And that struggle was presaged by, on Monday, the 31st of December in 2012, Obama said, Republicans will have another thing coming if they think that the budget cuts is the only thing that's going to happen. He believes, and he wants, budget cuts along with tax increases. Well, we just had a tax increase, so this is going to be a monumental struggle. And we're going to go to our panel here shortly and figure out if there are any answers to this coming struggle. But you know, there's a fly in the ointment with this little picture here, and we need just to take an aside here and go into what is this fly in the ointment, and that is the Federal Reserve. The Federal Reserve has been keeping down interest rates to help the government in its huge borrowing extravaganza that's happening. They are buying securities, which are bonds, whether it's mortgage-backed securities, and they're also buying treasuries, and this allows this spending spree, so much over what the government takes in, allows it to happen along with the debt ceiling, which will be breached, if not breached already. So, the Federal Reserve has allowed money to come into the economy, and thus the commercial banks have about a $1.4 trillion reserves sitting at the Fed, being unused, and they're being paid an interest rate for that. So they're getting a nice little profit from that. However, should this economy that's not bad here start to expand, a loan demand may develop, in which case this $1.4 trillion will start to become available to a higher demand at the commercial level by businesses. This will produce higher rates. It'll be a demand on money, and when this higher rates go up, the interest rates at the Federal Reserve are going to have to go up to compete with the money that it's using to buy securities at the Treasury. So the bonds are all going to go up when the demand on the economy starts to rise and business loans start to become in demand. But something else is going to happen, and that's inflation. When this money comes out of reserves, inflation from the excess reserve is going to hit. And this will be, we'll have a warning. And that will be the price of gold. When this demand kicks up, the price of gold will shoot up, indicating inflation, the money, and then right after that, the higher rates of interest. With that summation, let's go to our panel and ask them their opinion and what's going to happen with the other half of the fiscal cliff. Mark, I'd like to start with you.
When you say other half, you mean the spending half?
I'm sorry, when I said the other half, did I mean what?
The spending half?
The spending half, yes.
Nothing's going to happen to it. They're not going to cut it. It's just going to keep growing. I can't believe we have to take time to discuss that.
Okay, but there is a looming fight here with the GOP coming for the raising of the debt ceiling. So we actually, actually you're right. We have two questions going on here.
What are you talking about? We're the indispensable, exceptional nation. We will just raise our debt ceiling if we need to. We can do whatever we want. This is the United States unipolar moment. We rule the world. People will always buy our bonds regardless of how big our debt is. I think this whole conversation is moronic. We are it. The United States is exceptional.
So you don't think the GOP will do anything and become spineless and not really fight the administration on raising the debt ceiling and just allow the borrowing to go as it has been in the past?
I disagree. I do not think the GOP will become spineless because they're already spineless. The GOP is disgusting. The GOP is probably the biggest part of the reason that we're in this hole. Multi-trillion-dollar wars, corporate benefits to every one of their constituencies. People blame it on the Democrats. A false friend is worse than an enemy. And for anybody with any kind of fiscal prudence who thinks the Republicans are the party that they should support, those people really need to have an introspective moment and realize that the Republicans are throwing this country down the toilet. But again, it's our moment. We're exceptional. This is all just, philosophical exercise.
Well, that is the name of the program. So, Rick, any comment?
Well, it's leaving aside the details, the messy details of how true Republicans have been to the creed of restraining the ever-rising cost of government. They do want to be seen as the party of fiscal prudence, and they will haggle with the Democrats, but probably not force the country to declare bankruptcy for even a moment. They will haggle with the Democrats and get some kinds of concessions in the spending race. But I would contend that the ultimate outcome, as far as the end of this presidency is concerned, it just won't change much. The deficits will remain enormous. If they're not $1 trillion, they'll be still pretty close to that. And so the real question is, at the end of 4 years, how will the bond market react? How will the buyers of U.S. debt instruments react? Will the appetite remain unaffected, as it seems to be for the moment? That's very hard to tell. Rationally, if the ability of a country to cover its interest costs falls, 15 or 20% rationally, there should be a bond downgrade. Will Moody's do that, or Standard & Poor's? Who knows? It's too politically charged to tell. Will the Chinese demand a higher interest rate for hoarding U.S. government debt? Again, very hard to tell. At some point, that will happen. All right. Trees don't grow to the moon, and not even U.S. government debt can grow to the moon. But whether that happens within this administration or the next, it's just too difficult to tell yet.
Well,
Chris, the only problem is that the U.S. debt already has grown past the moon. So Rick's analogy is a little bit off. But again, we're the indispensable nation. Without us, the world would just collapse.
Well, so this really brings forth to the what should the GOP do? If you were the leader of the GOP, what would you advocate your party to do with in the coming days or the coming months amidst the struggle that's going to happen, whether they should raise the debt limit? What would you?
Yeah, let's talk about what they should do. Let's not talk about what they didn't do when they had both houses of Congress. You know what they should do, Chris? They should resign in disgrace. When they had both houses of Congress, they could have taken care of this. Did they? Of course not. So here we are, stuck in this jam. And all they care is that they keep holding us by the short hairs like this, so they can keep getting their campaign contributions and with their big philosophical differences with their buddies in the Democratic Party, and hose the American middle class the entire time. People like John Boehner and John McCain and Mitch McConnell should really be probably put in Alaska and just given a warm coat and a gun and let them go fend for themselves. That's what they're doing to the American middle class.
Rick, what do you think that the GOP should do in this coming struggle between the administration and the debt ceiling limit?
In the world, I would stick to the debt limit, shut down the government for at least a period of time, and extract the biggest concessions possible. Because, I mean, with this kind of problem, it only gets worse over time, right? I mean, the longer they kick the can down the road, the more devastating the result will be in terms of the ultimate devaluation of the dollar, the level at which interest rates ratchet up, the ultimate inflation will be faced with. So I mean, the sooner we precipitate the quote-unquote crisis surrounding spending, the better, as far as I'm concerned. But I just can't envision that happening. The Republicans really want to be seen as the party of fiscal prudence, but they don't want to be blamed if there are inconveniences like a temporary shutdown of the government. That's the issue.
That's a natural
Chris,
go ahead.
If they wouldn't do it when they had both houses of Congress, to even think that they might attempt it now or that they really do want to be seen as the party of fiscal prudence is wishful thinking at best.
You know, just getting back to this one little point here on the 31st of December, when Obama said that the Republicans have another thing coming if they think that they can cut the budget without having further tax increases. And I believe he was talking about the raising of the debt ceiling. If that indicates a struggle, what ratio should it be that the Republicans should go for in reducing the budget deficit, or can they at all?
Well, Chris, I want Rick to answer that, but let me just throw out one piece of data.
Go ahead.
So this deal that we just signed, the ratio was $41 in tax increases for every $1 of spending cuts. So let's hear what maybe these fiscally prudent Republicans might do for us this time.
Well, they have a second try, which is now immediately to be confronted in this raising of the debt ceiling. What should that ratio be? Rick?
Well, to me, the spending cuts are paramount, and for every dollar of cut, as a fiscal advisor, I would suggest that the Republicans be prepared to apparently give away at least something in terms of tax increases. Otherwise, they're not going to get much at all, unless they're willing to shut the government down. If they're willing to shut the government down, that becomes, the ultimate means of forcing the Democrats to vastly increase what they're even considering in terms of spending cuts. I'm relaxed about at least limited tax increases because we've seen over history that the federal government's never been able to collect more than about 20% of GDP in taxes. And that's not going to change. All right, there are too many smart lawyers and accountants out there. So, however they choose to reorient the tax code, one would hope that they would leave business-related taxes untouched. That's the more important issue.
Okay. Mark, anything to add here before I switch subjects?
Let's switch subjects.
Okay. Next up, the interest rates. I stated that I think that gold is going to tell us when the interest rates are going to come up, because it'll tell us when economic demand is going to come in, inflation happens, interest rates go up. How badly are these interest rates going to affect this budget crisis? Because right now, presently, the U.S. government on all this extra debt is paying almost nothing. In some cases, part of it, they do pay nothing on the interest payment, on their interest payments. What kind of scenario are we looking at here? Anybody?
Well, I mean, the only way that we ever come to a meaningful solution to this stuff is to have some kind of a cataclysm. And a cataclysm that we could have would be the United States government inability to fund itself. And that could occur because they can't roll over the debt, because their investors will demand too high of an interest rate. We're not near there yet, because we are the one indispensable, exceptional nation who will always buy our debt regardless of what the debt ceiling is. But eventually we may get there one day if we lose our exceptionalism and our ability to be the ruler of the entire world with troops in 180 countries all around the world. So until that time, we'll just keep issuing scrip and hoping the Chinese are willing to buy it.
Well, the Chinese are not buying it. They've been decreasing their purchases.
Yeah, we haven't had a debt auction fail in 20 years.
That's because I believe the Federal Reserve is helping out with that.
That's because somebody's buying it, and that's all that matters.
That's true. Rick, what about this interest rate problem?
Well, I mean, you've got the Fed enabling all of this, and they got their foot to the gas, and they have made it very clear they're going to keep their foot to the gas for the rest of this administration. So I tend to think that interest rates are not going to pop that quickly. What you will see in advance of that is the effective price of the dollar decline, as it already has. The dollar's value in terms of gold has declined dramatically in the last several years already, even though interest rates have remained as low as they are. So I would expect to see, again, the foreign exchange effect play out first, and interest rates may not even pop till the next administration. But again, it's very hard to tell with these things, because when it changes, it tends to change overnight.
Any forecast on when the interest rates will start to go up? Mark, any forecast on that?
Yeah, when things get to the boiling point.
Okay. Any time? Can we put in any time limit on that? Any time forecast?
Chris, when you make predictions, you give a date but not a number, or a number but not a date. I'm just giving you a kind of general condition when things reach a boiling point.
Okay. Rick?
I think if S&P and Moody's were rational observers of what's going on, another debt downgrade will soon be in the offing, and at that point, logically, the U.S. should pay a higher premium. But will they? Will Moody's and Standard & Poor's actually analyze the U.S. government's fiscal picture accurately and pronounce accordingly? Don't know. In fact, I doubt it.
Yeah, and that brings me into the last subject.
Chris,
go ahead.
Moody's and S&P are perfectly rational. What they're not is they're not honest, and their dishonesty borders on treason. They are encouraging us to drive off the cliff. We went off the cliff about 5 years ago, but those rating agencies are so dependent on government largesse and keeping this whole charade going. It's perfectly rational behavior. It's disgusting, dishonest, and treasonous at this point.
Aren't they under some pressure, though, directly from the U.S. government to temper the downgrade? That that the U.S. government didn't they have some retribution involved there?
Oh, of course. I mean, well, first of all, when the issuer of your debt is the one paying your fees, he whose bread I eat, song I sing, you will say give the whatever rating that issuer wants. So U.S. government debt, they got a lot of flack when they downgraded it 2 summers ago. But these people are generally part of the corrupt regime, are disgusting and treasonous.
Okay, what kind of, to my last question here for the day, what kind of effect would the downgrade have on this problem of the deficit spending? Anything at all?
What kind of effect would a downgrade have?
Yeah, yes.
I mean, anybody who's relying on the debt rating agency's ratings is probably somebody also, the first thing they do in the morning is read their horoscope. You've got to be a moron if you look at debt rating agencies, with anything they write. Again, why listen to a traitor?
Okay. Rick? Any effect you think that a downgrade might have?
Well, again, if it were a corporate bond, any downgrade would automatically trigger a sell-off, right? I mean, that's just basic finance.
Right.
But in the case of the U.S. government, and as Mark has rightly pointed out, this is such a politically tortured issue that we haven't seen any effect from the first downgrade. So it's very hard to tell when the U.S. government will actually suffer. Other governments already have. Greece comes to mind, Spain, Italy, and a bunch of others. When the U.S. government reaches that tipping point is, again, hard to tell. It should happen, but, again, very difficult to tell.
No, it will never happen because we're the one exceptional, indispensable nation.
Okay. Thanks for your comments. And that concludes today's Philosophical Angle. And we'll see you next week. Thanks for joining us.